Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 22nd of May 2026. First chart is the US Dollar Index Futures. They traded in a bit of an uncertain fashion this week. There was some testing for supply below the previous bar's close, a modest attempt to push higher, and a fade lower by the end of the week. This was like an absorption bar right at the important level, which is the breakout line from here and the breakdown line from that bar through there. The market's traded as an absorption bar right at that level, finding that buying support emerged when price traded below that level and supply was drawn out when price traded above that level. And that forced a mid-bar close. You'll note that volume increased and it was slightly above the average. That's showing you that there was supply in the market, but the mid-bar close holding on at the important level shows you there was good buying support in the market, and that held the market up to a fair degree. And that inferred strength has caused many of the associated markets to show a bit of weakness this week. And any markets that did move higher are actually showing you good signs of strength, because the inferred strength in this market should have made most of those associated markets show signs of weakness. Next chart is the E-mini S&P. This is S&P 500 Index Futures. And they also tested the market for supply below the previous bar's close initially before moving higher. The increased and about average volume shows you that there was buying support in the market. The market didn't float higher on low volume and a lack of selling pressure. The market moved higher. That shows this inferred weakness on this bar last week was tested for supply, buying support emerged, and the market pushed higher in response. It was still within the range of the previous bar as an inside bar, which makes the going a little easier, but the fact remains that the market was bought higher this week, at least to a reasonable degree. Perhaps the only issue you can see there is that spread was fairly narrow, so there was supply being drawn out, there's no doubt, and the market was buying that supply at this point in time. This is the US Treasury 10-year note futures, and they were threatening to break down this week. This is the first trade outside of this range we've seen for weeks and weeks, months and months. This has held firm as a controlling two-bar combination for some time now, and the market did trade below it. Buying support did emerge. This wasn't contract rollover, that's next week. The market traded below the lows of the range, and the range was defended to some degree. Buying support emerged and the market closed just at that level. It's still looking very vulnerable, but there was an attempt to support the market at this level. There will likely be a test for supply and response next week. Whenever you get really high volume like this, the market generally will test for supply. I guess initially it'll look something like this. Much narrower spread, an initial pullback, an attempt to recover, and then we'll see how the market trades from there. If supply continues to be drawn out, this will fail, the market will continue lower. And if there's very little supply in the market in response to last week's buying support, then this market may attempt to push higher, and this will be the new resistance level here. The next chart is copper price futures. Copper price futures had inferred weakness emerge last week here. Remembering in the background, we've got the same sort of thing which occurred a few weeks ago. When the weakness emerged there, the market closed back below the highs of the range. This week, when the weakness emerged, the market remained above that important level. And in response, the market only pulled back briefly below the previous bar's close to test the market for supply. The lower volume, below average volume, suggests there wasn't very much supply in the market after all, and in response, the market floated higher on a lack of selling pressure. That suggests this market will likely attempt to push higher, or at least float higher, because the weakness that did emerge appears to have been absorbed on this bar, and it doesn't exist anymore. Only very little supply was drawn out, and the market was easily able to absorb or buy that, and that caused the market to then close as an up bar this week. And that shows you the strength of the buying support in this market, and that suggests this market will likely push higher over time. It may test for supply early next week below the previous bar's close, but overall this was a sign of strength, this little period here. What supply was drawn out appears to have been absorbed by the market. If that's the case, this market is probably going higher. Gold price futures. Gold price futures came back and have effectively closed right at the lows of the current range here. Most of the trading was below the previous bar's close, effectively testing the strength of those lows, testing the market for supply. Volume was very slightly increased but remains well below the average. So it was lackluster trading. There was no great supply emerged. That kept the spread relatively narrow, and there was sufficient demand for the market to close right at the lows of the range, which is currently the important level. You would generally expect the market to respond at that point and attempt to push higher. But this market's been trading quite tentatively over the last few weeks. If it was to break down further, you've got levels through here which would offer some support to the market. But I'm expecting the market will probably find some support and just float higher here, even if it's on relatively low volumes. You've got an intermediate level here, highs of the current range here, and the breakdown line in the background up here. I expect the market will just move a little higher in response to the buying support which emerged this week. Silver price futures, similar to gold to a large degree, came back, tested the lows of the range for strength in here. The overall lows are below that. This is like the mini range. And I expect the market will probably find enough buying support just to remain within this zone, at least in the short term. It doesn't appear the market will pull back any deeper. The mid-bar close suggests that selling pressure was low and there was enough demand in the market for the market to close in the middle. The most likely response is for a slight push higher back into the middle of this range. This is like crude price futures, and after pushing above the June 22 highs again last week, price has faded back to that level again. This is the equilibrium level through here, and just below that is where the market continues to cluster closes in the background. So overall, this is an important level. The market's respecting it, and when it trades above it, it pushes back to that level each time. When it trades below it, demand comes in, and the market trades back at that level. We're talking between 90 and 96 or thereabouts. That's the equilibrium zone. That's where the market's trading within at the moment. A breakout of that zone, sort of through here, a breakout would likely be significant if and when it occurs. Into the currencies now. This is the Euro-US dollar currency pair, and it has traded almost the exact inverse of the US dollar, as you'd expect, and it's traded very comfortably within this little zone here, which I've marked quite some time ago. They're logical levels. That's exactly where you'd like the market to be trading. You feel comfortable that it was genuine trading. Volume increased slightly, so there was some buying support in the market. And this market's traded right in that zone very nicely. Look at the pound. They always trade very similarly. The pound was a little weaker last week. It probably overshot its lows here. So it's seen a little recovery this week and back to this level here, which is effectively another logical level for the market to move back to, attempt to find support. So both those markets, the euro and the pound, both were left hanging to some degree previously and have recovered to more logical levels this week, or at least within those logical levels. This is the Japanese yen currency futures. Spread narrowed considerably this week as the market attempts to hold on to the lows of the range here. You've got like a last gasp lows here from this bar here. The market's traded between those two levels on increased but well below average volume. So this was lackluster trading. The market's just drifted lower, but there was enough demand in the market just to hold on between those two levels. It certainly doesn't look strong here, and any serious sign of weakness would force a breakdown, no doubt. Aussie dollar currency futures, they pulled back slightly this week and tested this level here for strength. You see that price traded right at that level, and there was some buying support emerge, and price recovered to close almost adjacent to the previous close. This was effectively a test for supply to some degree, a little bit of an awkward looking one. Volume increased over the previous week's volume. It was still a slightly below average, but it was increased, showing you that there was buying support emerge when price pulled back. That's why the market's closed mid-bar. So there is still strength in this market, and given any sort of weakness in the US dollar, price will push back up to this level, no doubt. If the US dollar gains further strength, it'll probably come back and settle at this level. Bitcoin futures. Bitcoin futures came back this week in response to the inferred weakness which emerged last week on this bar. Prices come back, volume reduced, so selling pressure reduced. That allowed the spread to be fairly narrow. The market's looking well placed for a little push higher again now. We are expecting there will be some resistance or supply drawn out to the left here when price moves above the highs of this little range that I've drawn. And I expect that resistance will be even stronger up here if and when the market pushes above that level. So the market's just working its way through the supply to the left from this gap down here. And I would expect that some of that supply was absorbed here. The market's pulled back in response, as you would expect, because there was supply drawn out. It doesn't appear the supply is chasing price down. It's remaining up there. So price will probably float higher next week, and it'll probably find that it's easier to trade up to that level now. And over time, it'll probably push up and do this similar thing, attempt to absorb the supply up in the level above. I don't think it'll challenge this level in the very near term. There's likely to be further supply and probably stronger supply drawn out up there. So look for the market to float higher next week, probably up to that level there with relative ease. And then you'll find the market will have to work a bit harder again in this level in here. There'll be further supply up there, I imagine. And don't expect any serious challenge to this level in the very near term. That's a project for a little bit later. Okay, back to the US dollar index futures just quickly to finish up. You can see the market has found some strength down here when the market traded through here, pushed higher up to the highs of this mini range. And this week the market has effectively spent the week in consolidation mode. It was testing for supply. Supply was being drawn out. You can see that by the increase in above average volume, but the market has comfortably absorbed that supply. At least this week it has, and that allowed the market to actually push higher and close mid-bar right at the important level. There was always a good chance there would be supply drawn out from the left up here, and it appears that's what's happening. The market's making a good attempt to absorb that supply. Now, next week again, you may find the market comes back and test for supply again with a narrower spread early in the week. And if the buying support remains strong and supply isn't overwhelming, you'll find the market will then attempt to continue higher later in the week. If supply is drawn out, you'll see a deeper pullback to threaten those sellers before an attempt to recover later in the week. Okay, thanks for your time. Back again next week. See ya.